Hello there, everybody. Nice to see you today. This is Craig at Max Trading along with Chris and Eusebio, and it's a pleasure to welcome you to our real-time NFP trading session today. Good to have you in the room with us. We are looking for today's U.S. jobs news to provide some nice price action for us. Unfortunately, we don't have a crystal ball that works very well, so we never know what the numbers will be or how much they might impact the market. Those things are always unknown. But the max charts are ready to take advantage of whatever the market will give to us. And we'd like to show you how max trading methods can take advantage of movement in the markets. And very importantly, perhaps more importantly, how our risk management protects the account balance. So you'll get to see some of that today. Please remember that this is not a trading room. We are not providing trade calls. Nothing you see or hear can be taken as entry recommendations or exit advice. All of it is for educational purposes only. And Eusebio is here to lead us into the markets and show us his charts for this NFP session. Some of you, I know, you've not yet had opportunity to meet Eusebio, but you will soon discover that he is a highly skilled trader, and you'll quickly realize, I believe, that he really enjoys helping traders. So I hope you'll be able to listen and watch carefully, and do feel free to ask questions. You can use the question panel right there and go to webinar, and we'll get to every question today. By the way, Eusebio is still recovering from recent major surgery. We do not expect any problems, but if by chance he should get overly tired or have any other problem, then we will shorten the webinar, and I know you'll understand that. But be nice to him in the meantime, okay? Give him plenty of opportunity to get to the questions. There's no hurry. The methods that you see today are taught in the MAX courses, which begin next week. Or you can choose to begin your training anytime by using our videos. And we do provide very nice discounts for those who attend our webinars or watch the video playbacks, and we'll have those links available for you. Eusebio, I think that's all the preliminaries, and we're ready to get started. And we do thank you for sharing your time with us today. So the microphone is yours.
Okay, thank you very much, Craig. Hello, everyone. Nice to see you. Before starting, let's make a quick audio and video check. Do you see my screen and do you hear me well? If you'd like to type a yes or a Y in the question area, it would be nice. Oh, I see some fast answers. Thank you very much. That's nice. Okay, so today we are facing, we are facing an important news release. You can see it in the Forex Factory calendar. I like to use the Forex Factory calendar because it is a clear and clean one, but there are many other similar economic calendar. So, but what is important to have in terms of informations are, first of all, the meaning of the news. If we take, for example, the US dollar non-farm employment change, if you click on this small icon, you can have a quick definition of what the news is or what the report contains. And then you will have usually the impact in the case we have a number which will be better or worse than the forecast. However, it's much more complex than that. And there is also a color code telling the kind of impact which may arise in the case of a surprise, but also this is not necessarily correct. In the case of the non-farm payroll, it's a complex one because the big boys always analyze the combination of the non-farm payroll itself with the unemployment rate. And in order to have what I call sustainable and directional movement after the non-farm payroll, we need to have a surprise, a big surprise in both of them and in agreement. What does this mean? This means that you can see the forecast here, which is the second column, is 195 key. we need to have a deviation with the actual number, which will be released in around 9 minutes now. So the deviation is the difference between the actual and the forecast. And we need to see a deviation larger than 40 or 50K or more, of course. And so the deviation can be positive. This means that the actual number will be larger than the forecast. But in such a case, we need also to have a smaller number for the unemployment rate. A better number for the unemployment rate is a smaller number. For example, 3.7 or less percent. In this case, we should see, this is what happens most of the times, the US dollar strengthening. And so pair like the euro-US dollar, the pound-US dollar going downwards. On the contrary, we may have a negative surprise. This means a number for the non-farm payroll smaller than 195K by 40 or 50K or more, and a larger number for the unemployment rate. So the two news must be in agreement. A better number for the non-farm payroll requires to have a smaller number for the unemployment rate and vice versa. In all the other cases, the movement we will see is not tradable. It is tradable, but it is way, way riskier. Personally, when the two numbers are not in agreement and when we don't have a big surprise, I don't trade the movement after the release. I trade the movement only if we have a big surprise and two numbers in agreement. And we have, in addition, also the trade balance, which is always an important number, even if it is in yellow. And it is particularly interesting to observe it nowadays in the context of the currency wars and the trade wars between USA and China, for example. And so a positive number would be a number larger than minus 43.68 and a smaller one in the contrary. And so we have to wait, and we don't need to be in a hurry, because usually if we have a big surprise, we will see an important spike in many pairs, if not all the pairs. We don't trade these spikes. We will have to wait for the volatility to slow down before considering any trade. This is the rule with the MAX. We never open a trade when we have an entry set up within the last hour before the news release. And if we observe on our chart, I have taken, for example, here 4 pairs, the pound CAD, the euro US dollar, the pound US dollar, and the pound yen. These pairs are chosen based on our website here. Each week we develop what we call the news watch list, which is the news we consider as important for the coming week. And so today we are on Friday. And then below that list we have for every day of the week a suggestion of pairs to consider based on these news releases. So the pound CAD, the pound US dollar, or the euro US dollar, and the pound yen. So this gives us for today 4 pairs. There is no guarantee that we will have movement in these pairs, but usually when we have surprises in the news release, we have nice movement in the suggested pairs. So these are the 4 pairs I have on my screen. And I will use 2 sets, 2 levels of the MAX to illustrate today the MAX primer, with the chart here at the bottom of my screen. And on the top of the screen, I have the corresponding chart, but using the MAX ETF sum, using a constant range bar chart. And so I will illustrate how the MAX makes trade based on the sum charts, if we have such an opportunity. And for that, I will use our tool, which is called the MAX Trade Monitor, which will give us very important information along the trade, helping us to handle the trade risk. Whenever with the MAX we open a trade, the first priority we will have is to monitor the risk in order to progressively reduce the risk on the trade until the risk will be cancelled, in which case we will be in a risk-free trade, or the trade is closed. And we never know in advance the issue of the trade, so We may have a break-even trade, a positive trade, or a negative trade. So it depends how we are able to handle the movement and how volatile also the pairs will be. And so the news now is due in around 4 minutes. And so we will still have to wait and see what the news will give us. Let me check my clock here. 4 minutes, a little less than 4 minutes. In the meantime, if you have questions, feel free to ask in the questions area. You can see that on one of my charts. Sometimes I do that on all the charts I'm monitoring every day. I draw some vertical lines. The vertical lines correspond to the news release. So this red vertical line corresponds to the US non-farm payroll, unemployment change, trade balance, but also the similar news we have today on the card. And we have also orange vertical line, which corresponds to the US session open, the Wall Street open, the Frankfurt close, and the London close. And then we have some of our tools on the chart, which are indicators. We do not trade the indicators. We use them simply to pinpoint faster when we will have situations we have to consider, either as an opportunity to have a trade or as a risky situation for an open trade, in which case, if the risk becomes too much important, we have to consider all the possible actions we have at our disposal to reduce that risk. 2.5 minutes. I think we must now have on the calendar the small green button. Let's check. The small green button appears 5 minutes before the news release. And what I will do is I will reduce the size of the browser here just to have the interesting news and see on our SAM charts if we will have spike in the case of a surprise. And so if we have an opportunity, so this means we will have a surprise in both the non-farm and the unemployment rate in agreement, we will not rush on the chart to consider opening a trade. We will have to wait for the volatility to slow down before considering trading what will usually happen in that case, what I call the directional and sustainable movement or momentum movement. Now, some website gives the numbers faster than Forex Factory, but because we are not, we don't need to rush. It is not important if we are a little late before the news release. And sometimes I still feel a little tired when I make a long effort, but it's improving progressively day after day. So I'm happy to. Okay, normally we should have the news release. Let's update the page. And what will happen very frequently is with some brokers, we will have a slowdown of the platform, but because we don't trade the spikes, this is not important by itself. We will simply wait. So we have 213K. So the deviation is positive, but we have only 18K as a deviation. The deviation is not large enough to have a big surprise. And Chris tells me that we have an unemployment rate at 4%, so a negative number. So the two numbers are not in agreement. So they are opposite each other, and furthermore, we don't have a big surprise. So this is not, for me, a tradable situation. So, and we have a neutral trade balance. Let's have a check on the similar news for the card. We have the employment change, which is 31.8. This is a big surprise for the employment change. In Canada, we have a worse number for the trade balance, and we have a worse number for the unemployment rate. So we have also opposite numbers in the Canadian non-farm payroll. I call it also the non-farm payroll because it is a similar news in Canada. When we have numbers in agreement giving situations to trade, we still need to wait minimum 2 minutes after the non-farm payroll news release, because 2 minutes after the non-farm payroll, we have the revision of the previous months. And sometimes this revision can also create some surprise in the market. So let's wait and see. Normally the revision must be released now. And now we don't have what I call an interesting tradable situation. And so normally I should stop the session here, because for me it's not a tradable day or afternoon. I'm in my time zone, it's afternoon. But what I would like to do is to illustrate, in the case I force a trade, because this is something which happens very frequently. What can we do when we force a trade? Forcing a trade is taking a trade when the conditions are not appropriate. So I would like to remember that when we have an opportunity for a trade, we always have to validate the trade under 3 types of conditions. The first condition is on the technical point of view. We need to have a valid technical entry setups. And with the MAX ETF, we have lots of entry setups. The second condition is on the trade risk aspect itself. And the third condition is about the global context. We know today that the global context is not appropriate. And so we don't have the 3 levels of validation. However, just to illustrate the trade risk management, let's consider forcing the trade and see how we can handle the risk. But remember, this is not a trade I would take normally. It is just to illustrate the trade risk aspect with the MAX. So I'm going to wait for valid entry setups, and I will consider, for example, which pair we can take. For example, one of the most volatile pair, the pound CAD or the pound yen. Let's take, for example, I like to trade the pound, or both are good. Let's consider the pound CAD. I will install the Max Trade Monitor on the pound CAD chart. Here, it's an export advisor. Max Trade Monitor, if I can drag and drop it, okay. And I will have to set my parameters correctly. I can load them from a preset file, my MTM settings here. Yes, and I will not number the trade. I will make no notations on the chart. Okay, and you will see the types of information we have on the screen I will show you. I will do that in a moment. So here we have an entry setup with the pound CAD. Okay, I will make my entry here, so buy. Of course, the execution of the buy is always, take always into account the spread. Okay, so here we have now a trade which is opened. The trade is always considered as being made of 2 units. You see here units open, and this panel gives us 2 kinds of information. First of all, information on the pair, which is the pound CAD, and then a global information column. The symbol column gives the information on the trade related to the pair, and the global column gives information on all the open trades in the case I open several trades on several pairs. Okay, and what I have missed to do here was to set my stop loss on the right way. So I have taken a too large stop loss. The consequence of that is the trade size has been reduced. So, but this is not a problem. I will just show you the trade risk management aspect. I should have placed my stop loss somewhere in this area, but now it's too late. Yeah, but you will see the effect of tightening the stop loss. You can see that the risk is almost 1%. I will explain these numbers in a moment. If I tighten the stop loss here, you will see that the risk will be reduced. Okay. Now, what are these numbers? The first number, which is the most important one, is here the ESL result. ESL means emergency stop loss. It's the stop loss represented by this red horizontal line, which will close the trade if the price hits that level. And the maximum risk we have is always related to that price levels. And the size of the trade is always calculated based on two information. First of all, the financial risk. In this case, I have taken 1% of the trading account, and the size of the stop loss. And you have seen that by tightening the stop loss, this reduces the risk on the trade. It doesn't change the size of the trade, of course. Let me show you the terminal panel here. You will see what I mean. Terminal here. And if I go in the trade panel, so a trade on the pound cat has been open with 3 mini lots, okay? And so these 3 mini lots are made of 2 units. Each unit has a size of half that size, so 15 microlots. The second important information is the XXX profit. XXX in our jargon means the close of the trade. The trade is completely closed. The 2 units have been closed. We consider 2 units because we can always close 1 unit at a time. We don't need to close the 2 units at the same time. We apply a scale-out approach. And so this is the result we would get on our account should I close the trade at any moment on the present price. So if I close the trade now, I will get a net profit of 0.2%. And so we have the risk and we have the potential profit. These 2 numbers are extremely important to handle the trade risk. Okay, and when I will close 1 unit, you will see the number of units will be decreased by 1. The size of the open position will be reduced by half. And you will see how this will impact the risk on the trade, the ESL result. Now that the trade has been opened based on only a technical entry setup, I'm waiting for an exit setup. What is an exit setup? An exit setup is a set of conditions telling me that the risk is too much important for the trade. And when this risk is too much important, we have to close the trade, or we have to reduce the size of the trade. Okay? Clement, I have explained the 2 situations when the trade was possible. So a deviation big enough for the non-farm payroll, 40K or 50K or more, which was not the case, and a deviation also in the unemployment change, but in agreement with the non-farm payroll itself, which was not the case. The 2 numbers were not in agreement, and so this is not a normal. The global context is not favorable. Okay, this is the feature of the non-farm payroll. Now let me see if this situation now is a situation which call for an MX. So this candle here, this one is for us an exit setup bar. Let me draw a red vertical line or a magenta vertical line on this candle. just to explain the concept. And so in terms of exit techniques, we have several types of exit technique. We have exit technique based on the behavior of some indicators. We have also exit technique based on the price behavior itself. We call price action exit techniques. We have exit technique based on a combination of both. We have exit techniques based on timing consideration. For example, when we will approach, the session will be over at that moment, will be closed, but if we are still in a trade and we are in the proximity of the Frankfurt and the London close, we consider how to close the trade. And we have also exit technique based on what we call movement invalidation and trend reversal, ETF trend reversal. An ETF trend is a movement, a momentum movement, and that trend is given by our companion indicator, which is this red and green line. And so when the line is green, we consider only long trade, and when it is red, we consider only red trade. So this red candle is also an exit setup, but the price has not followed through enough for me to make an exit. The price is moving in our advantage, in our favor, so we can tighten further the stop loss. This is again an exit rule. So here I will make my exit if the price comes to this level. Let me set the level correctly. Yeah, here we are. And so here I will close 1 unit. An MX, the MX button means a momentum exit. This closes 1 unit. We are left with 1 unit, and you can see here that the size of the trade has been reduced by half. Okay, and you can see also that the impact of closing 1 unit has reduced the ESL result. Now the ESL result is green. This means that whatever the price can do, if it hits this stop loss here, which is far from the price now, we still make a tiny profit, but still a profit. If I tighten the stop loss, and I can tighten the stop loss around this area here, if I tighten the stop loss in this area, we have rules telling us where to tighten the stop loss. It will be around the area of this blue line. You can see that now we are looking more and more profits on this trade. Okay, and we are left with 1 open unit. If you look in the history, in the account history, we have closed 15 micro lots on the pound card with a small profit. So the profit was 0.2% approximately. So you see the price isn't moving a lot for the moment, but it's moving. And for those who are using the max standard, you can observe that this area was an area of TT rejection. Okay. So now that we are left with 1 open unit, we will look for the next exit rule to exit setup to close the trade, or because we have always the choice, so we can wait for the ETF trend to reverse. So we have the 2 possibilities, either on the next exit rule or on the trend reversal or the trend exhaustion. And the advantage of closing the second unit on the next exit setup is if the trend still hold, we will have the opportunity to open a second trade. Or for the max who are using the max standard level, they will have along this trade the opportunity to scale in. For example, this candle was a candle to scale in. Now, because the context is not favorable to this trade, I will not make a scale in here. I can tighten a little further my stop loss. You will see how the number here will increase slightly, looking more profits. My stop loss at the beginning was too large. I haven't set up correctly my stop loss at the beginning. I have opened a little too fast. That sometimes happens, but anyway, this is just to explain the concept we have with the max. This may be possibly another exit setup. We have to wait for the bar to close. And so this indicator here is the stochastic of the RSI, which is an indicator we like to use. And an exit technique is when the RSI makes a tops, for example, or a divergence. In this case, we'll have most probably as what we call an external divergence, which is an elaborated or complex divergence. And so here we have the setup, and I will have to make my exit at this level here, if I can adjust my level correctly. So if the price hit that level, okay, now I can make my XXX, okay, which is the case. So the second unit has been closed. You can see that the risk now is 0, the trade is closed, and we have made a small profit, but a profit of almost half R. And you can see in the account history that the second unit has been closed too, okay? And so now, when the context is favorable, we wait for the next opportunity, which will be also a long trade here in the pound CAD, if I stay in the pound CAD. If I open trades on several pairs, so the global column will give the situations with all the pairs together. Okay, have a great night, Chris. It's true that you live on the other side of the planet, so it's your night now. Have a good night. Now, I have chosen to illustrate the max with the sum chart because we have many, many more opportunities to illustrate with the sum. But we have exactly the same rules, of course, with the time bar chart. So the methodology is exactly the same. The rules are the same. But because we are using constant range bar chart, we have many more details in the price movements, and so we can take profit of these many more details. Some are also using, instead of constant range bar chart, Renko bars chart. They are similar. The difference between a constant range bar chart and a Renko bar chart is the bars do not overlap with a Renko bar chart. But based on our experience now with many years using the Renko and the constant range bar, the range bar chart produces a global profit which is approximately 50% larger than with the Renko bar chart. And because at the end we are interested with the profit, of course, so we use preferably the constant range bar chart. Now, when we use the sum approach with the constant range bar chart, as you have seen, as I have illustrated today, is I use the chart independently of what is happening in the time bar chart, but we can also exploit what is happening in the time bar chart and take the trade in agreement with the time bar chart, which makes the trading a little more complex. The process is a little more complex, but it's also safer because in a constant range bar chart, there are exit rules or risky situations we don't necessarily see. And we see them nicely. And so in this case, in the pound CAD, should I have used the time bar chart, I would not have taken that trade because these two bars were long bar. The advantage with A constant range bar chart is the chart moves faster or seems to move faster because we have many more details. Even with a small movement, we can exploit that small movement. After all, the movement, if I take the entire chart, so the open of the trade was made. So here, the movement has been from the entry to the close 23 pips. So 23 pips in the case of some volatility is a small movement, but we can still profit with that small movement. Now, should have I placed my stop loss correctly? So when the trade has been open, I would have most probably doubled the result. With a stop loss 2 times smaller, the result would have been doubled. So this gives you an idea of what can be achieved under such a circumstance. Do you skip a faster MX at 1537 at the first pullback? This is a good question. So we had a first pullback here, indeed, at this point exactly, with this first red candle. And I have normally an MX could have been made, okay? And when we have students using live the max for the first time, or where they begin to use the max live, we suggest them to make an MX when an MX situation happens. However, in the course, I explain that this is also what I call a discretionary situation. A discretionary situation is a case when we can be more flexible with the exit rule. And we have several types of discretionary situations, but each discretionary situation must be handled based on the trade risk management. It's out of question to do something with subjectivity. We have to drop or to eliminate the subjectivity from our decision process. The discretionary situation I'm exploiting here is the following. Should have I made an MX at this point, my profit would have been, you can see, approximately 15 pips minus the spread. The spread is around, the spread here, we have the spread here, 3 pips. So 15 minus 3, 12 pips. 12 pips is not enough for me as a profit on the first MX. And so my discretionary rule here is I will make my MX if and only if the profit I make on that MX is large enough, typically minimum half of the size of the stop loss. Normally my stop loss should have been around 20 pips, okay? And so here, the profit would have been too small, 12 pips. On the second opportunity, my profit would have been 19 pips. 19 pips was large enough. And this is why I have taken that MX and then the next exit for the XXX. Now, why can I use that discretionary situation, so more flexibility in the way to make our exit? I have explained that it is based on the trade risk management, and so on the risk consideration. And for our students who want to use that kind of discretionary situation, I explained furthermore that this is possible only and only if the risk on the trade is a risk small enough. Remember, I have taken a risk of only 1%. Having a full loss on the stop loss of 1% for me is not a problem. It doesn't hurt. And so this is the second reason why I can use that discretionary situation. Now with a larger risk, I would never take that discretionary situation. I would make my MX normally, okay? And so each discretionary situation is always based on a risk aspect. We do not want to have too large losses when we introduce some flexibility in the way to apply an exit rule. What else about this aspect here? Small risk, an MX with a profit large enough. Yeah, and that's all. That's all. So now the price is pulling back. This happens very frequently when we have, and we can see that more easily in a time bar chart, when we have these long bars, the price usually will retrace. And so in order to consider a potential second trade, we have to wait for the price to reverse in order to resume the uptrend, because the trend is still upward. And for that, we need to see these two yellow and orange line we call ETF lines to go upward. And so they must cross upward. The cross of these two ETF lines are shown by these small white down and up arrow. When the two lines cross upward, we have a small white up arrow, and when they cross downward, we have a down arrow. These cross are not entry setups. They simply show when the two lines cross. We will need to see the green color in the long-term bias. We have two biases on this chart. We have the red and green line, which is the long-term bias, and we have the brown and blue line, which is the short-term bias. We call them respectively the slow bias and the fast bias. And so when the price will resume the uptrend, if it resumes the uptrend, it will be a resumption of the previous uptrend. So we still need to see the slow bias being green. And at that moment, we will have several types of potential entry setups. And if one happens, I will show how we handle that entry setup. But again, remember the global context was not appropriate for a trade. However, trading with the max sum is a way to optimize, in fact, the result we can extract from even a small movement. Now you can see that on this bar, the two lines are crossing, but we need to wait for the bar to close. Yes, we have indeed brought, at that point, we had a divergence. Okay, we had a divergence in the fast bias, which is now cancelled with the fact that the slow bias has turned over. It has become blue. But remember, the context was not appropriate for a good trade in the CAD. The non-farm payroll for the CAD was we have had a good non-farm payroll, but a bad unemployment rate, and this is always a deception, a disappointment in the market. This is why I will not consider taking a trade for a CAD strengthening. I will consider only a trade for the CAD weakening. And because for the entire day the context has been positive for the pound, so I will consider only long trades for the pound CAD. So you can see here with this candle becoming more red and closing as red, the small white arrow has disappeared. So the two lines have not crossed yet. So we have to wait. Now, when a trade has been closed with a profit, we have two possibilities for the other trade, the following trade. Whatever the pair we can trade, we can either compound the profits or not. If we leave these numbers on the panel, on the next trade, we will use for the balance the initial balance of the session. So we do not compound the result. If we want to compound our profit, we have to reset that panel. And for that, we have a reset button here. If I click on the reset button panel here, the numbers are set to 0, and the new balance, the balance which will be taken into account for the next trade size will be the new balance. And so here we have this candle is now an entry setup bar. My platform is a bit too small. So here, this one is an entry setup bar. We draw them in green. And the stop loss should be placed somewhere in this area. This time I will be careful with the stop loss. So here in this area, and the entry will be made somewhere. So let me calculate. Somewhere in this area. So if the price comes up, let me check on my more complete template on my other PC. If we don't have a counter indication, yes, we have a counter indication. I'm only showing a simplified template. So we are facing what we call a TT line. And so my entry, instead of being made where my blue horizontal line is drawn, I will wait. So, okay, now, yeah, now it's good. So now let me show you a second trade. Where is my panel? It is here. So buy. Not yet. Not yet. So remember, this is a risky trade because we don't have an appropriate context either for the non-farm payroll on the US dollar or on the CAD. Okay, the price has not touched again my level here, so no trade for the moment. So we are forced to wait for another entry setup. It may happen, Chris, yeah, it may happen. For each trade, I will have to evaluate where my stop loss will be, okay? And I will be able to adjust it a little higher, indeed. Now, for the first placement of the stop loss, I don't use the blue line, okay? The blue line is simply used when we have to adjust the stop loss. The day of the non-farm payroll, no, Brad. The day of the non-farm payroll, so usually the first Friday of each month, I don't trade the European session before the non-farm payroll because the market is very, very quiet. So we have another entry setup here which is not valid. So it is not an entry setup. It is not a valid one. Let's see if this one is a valid one. No, it is not a valid one. This one will be a valid one if it closes as a blue candle. And so my entry will be at 16.7 at this point. And I can tighten a little bit the stop loss here, somewhere in this area. Okay. Now I have opened a second trade. You can see that the execution is made a little above by the spread. Because remember, the MetaTrader platform always shows the bid price. But opening a trade is executed on the ask price. Okay? So my stop loss was, the size of the stop loss was 18.6 pips. So I expect to make on my first MX a minimum profit of 9 or 10 pips, 9 pips. This means that my first MX should come minimum at this level, 25.7 or higher, of course, 25, 7, and this area, in this area. You can see that the risk is almost 1%, not exactly 1%, because when the calculator here, the EA, calculate the size of the trade, it always rounds off to a size accepted by the broker. This broker accepts microlots, so it is rounded to a number of microlots. And we can see the size of the trade. So in the trade panel here, 84 microlots, okay? 84 microlots. Now, based on my discretionary situation, so any exit setup appearing in such a way that the price for the execution of the MX is below this level, I will not take them, okay? And why this discretionary situation? Last year, I have made an important statistics on all my trades since I'm trading with the MAX. I'm trading with the MAX since 2008, beginning of 2008. In the past, I am still a very risk-averse trader. Whenever an MX rule was happening, I was making my MX, my exit. But I have realized that should I had applied my discretionary rules, as I do now, my global profit would have been way, way larger. Of course, when I get a losing trade, my loss will be a little larger. But the size of a loss when we have a losing trade is still acceptable, maximum 1%. And very often, I even don't trade a 1% risk, I trade with a 0.5% risk, or something between 0.5% and 1%. Now, the other information given by the expert advisor, the trade risk monitor, is either in percentage or in pips, what we have on the open units in terms of risk, what we have on profit on the open units, potential profit, what is the profit or the result on the closed units. But these are just intermediary results. For me, the two main lines are the ESL result, so the loss on the stop loss, essentially the adjusted stop loss, and the result at any moment along the trade. Yeah, as Craig has written in the question area, the price action is typically very slow, 12 to 18 hours ahead of the non-farm payroll, sometimes even 24 hours. It depends on what the market is expecting. You can see sometimes also horizontal lines on the chart, for example, on the pound US dollar. These are what we call max price levels. Let me show that very quickly. So this is the pound CAD. Where is my pound CAD chart? Should I have to switch quickly to it? Okay. So the pound US dollar, for example, illustrates some lines we have. These lines are calculated each weekend. So these lines have been calculated last weekend. They are, let's call them support and resistance level. And you can see how they nicely capture the price movement in terms of tops and bottoms, or area for tops and bottoms. So we have two formula for the price levels. We have a free subscription, and everyone can subscribe to the max price levels, either a max member or not. So we have a free subscription for 4 pairs, the Euro US dollar, the Euro Aussie, the pound yen, and the Aussie yen. And we have a paying subscription for 15 to 20 pairs, plus some indices like the S&P 500, the Nasdaq, the Dow Jones, the DAX, gold, and also the natural gas and the Bitcoin. And so if you want to subscribe to them, so I think that Craig will post in the question area the link for them. And they are very useful to make some MX, for example, or to validate a trade, because when we have an entry setup, we want to be on the right side of a max price level. Does the rule of not opening any trade within 60 minutes prior to a news release apply for just major news or both major and monitor? No, it applies only for major news, Brad. Monitor news, as indicated in our website, let me show again here. We have time for that. So on our web page, the news watch list page, so a monitor news is a news for which, in the case of a surprise, will create just some additional volatility, but not necessarily big movements. And so we have only to pay attention to the major news, okay? So we do not open a trade if the entry setups happens 1 hour, within 1 hour before the news release. And if a trade is opened and we are facing a news release, it is advised to close the trade 15 to 30 minutes before the news release. But today we had only for the US session the non-farm payroll. And so for the rest of the day, we have no other news which will happen, or at least no major news. Now with this blue line climbing, we can profit of that behavior to reduce the risk on this trade. The price of that is if we have some volatility, but it seems that the volatility now has slowed down. The risk is if we have an increase in volatility while the price is making a pullback, we will have the risk for the price for the trade to be closed out on the trade, because we are far from being risk-free. But if I tighten just a little bit this stopper, you will see the impact on the risk. So we have, let's say, a 1% risk for the moment. If I tighten it just a little bit, we have, for example, here, we will have a risk when the update will be made. It takes sometimes a small time to adjust the stop loss. Oh, okay, I see why. Okay. Sometimes MetaTrader asks to confirm the one-click button. Okay, you see the risk has been reduced by 1/3. The CAD PM, no, it's not an important news, Robert. You mean the IV PMI, it's not an important news. This is why it doesn't appear here in our news watch list, okay? And so it will be released in 40 minutes. We will still be there at that moment, so we will see. Normally, it should have no impact. Simply, if this may happen, a small volatility, but normally no impact. No, the CAD PMI have no impact, Robert. Oh, it's the same question on the question area of GoToWebinar and in the private Max chat room. On the time bar chart, the trade has been opened on this candle, so sometimes ago, and usually on a time bar chart, if the price doesn't move in favor of the trade within 3 bars, so we still have some times, the trade becomes questionable. So, it's important to have eagle eyes, Robert. And I have not totally recovered my 100% abilities. Now, when you are in a trade and you see the price is going against you, you never need to panic. It's normal to have losing trades. There is no trading system with a 100% winning rate. If someone one day propose this to you, a trading system with a 100% winning rate, be cautious. Be extremely cautious. And so if you have a losing trade, so as long as you have a small risk per trade, and if you have furthermore succeeded to reduce the risk on the trade by an important amount, you don't need to panic. The loss will be always a small loss. The advantage of the max is we have always a small loss in the case of a losing trade. And the loss will be less usually than 1 R, if I use the Van Tarp notation, R being the risk. Okay, so in this case, 1%. We can already see that here, in the worst case scenario, the loss will be maximum minus 0.6%. But most of the time, we'll be able to close the trade before the price reaches the stop loss, because we have what we call the movement invalidation concept, which will be the case should the price comes respecting some rules below this blue line. How do you manage your risk when you are in extended losing period? What are your triggers to start lowering risk per trade? What do you call an extended losing period? What do you mean by extended losing period? You know, as long as the trade is still a valid trade and the trade is not closed by our rules, I stay in the trade, because we know in advance that with the max, a losing trade will give always a small loss. Now, what may happen, and so it's impossible to have a big loss if you apply the max correctly, okay? Now, what may happen, however, is a losing streaks. Losing streaks are series of successive losing trades. And even if you have a high winning rate, for example, 70 or 80% winning rate, you may still face losing streaks made of 4, 5, 10 losing trades in a row. If you have several such streaks, you will have a drawdown, an important drawdown in your account. We have rules also to manage the drawdown with the max by reducing the risk per trade, for example. I never pay attention to the winning rate, Clement. Let me tell you something. When I trade with the max sum, so with our constant rain bar chart, I may have some days, for example, 10 trades, okay, 10 trades. And on these 10 trades, I will have, it may happen, it has happened, only 3 winning trades, 5 losing trades, and 2 break-even trades. And so in this case, my winning rate has dropped to 30%, 3 winning trades on 10. I don't care. I don't pay attention to the winning rate. What I pay attention at the end of the day is how much money have I made for the day or have I lost for the day. This is what is important for me. Have I made money or have I lost money? The winning rate means nothing. You can make big money even with a 10% winning rate. It's true that if you have your winning rate dropping, psychologically it may be difficult. And this is why you need to know your trading system extremely well. You need to know all the nuances of your trading system. What are the limits of your trading system? I know that even if my winning rate drops to 30% or even 20%, if I manage to keep my losses very small, then I'm sure that over time I will make my profits. And why have I this guarantee? It's not a 100% guarantee, of course. If you understand what drive the prices into Forex, so mainly the news release, of course, mainly the decision day by day of the central banks, the geopoliticals. So this means if you can understand the global context, you can find in which currencies the big boys will position their trades, the currencies where we will see action. And so once you understand that global context and you know which currency may see action, you can define the pairs to monitor in order to have trades. And if we have the global context in our favor, we'll have movement large enough for a trend following system to produce good results. And so even if you succeed to have only 50% of your pair, the pairs you select, moving nicely, you will make a huge profits on these pairs. But again, the profits comes not from a set of technical rules, but a set of technical rules applied in agreement with the understanding of the context. Okay? Clement, this is what I teach in our Max Advanced course. In our Max Advanced course, I describe an entire procedure on the trade risk management and how to handle a drawdown. And so, and the levels of the drawdown when we have to adjust the risk parameter per trade or the risk level per trade is defined with a tool. It is an Excel spreadsheet I have developed implementing that procedure. And so on each trade, we will have an appropriate risk to apply at any moment. And for example, with that approach, we predefine a maximum drawdown, for example, 10%, 15%, 20%, it depends on each one. Let's say, for example, 20%. And if you follow strictly the trade risk management, so you will be guaranteed to never exceed that maximum predefined drawdown. And so on each trade, the spreadsheet will give you at any moment the trade you will have to consider for each trade. Let me see exactly where I have to place my exit level here. On this place. So if the price comes here, because now we have the movement being invalidated, I will have to close the trade. There is an infinity of ways to define how to handle a trade, how to reduce the risk per trade, how to reduce your trade position. So this depends on your trading system, in fact, and on the behavior, on the skills you develop with your trading system. It depends also on the trader risk averse. For one trader, for example, a 20% drawdown is not important. For another one, 20% will be important. And so each one has to define his or her comfort zone in terms of maximum drawdown. Now, if the price reaches this level, I will close my trade. And you see, I will close the trade before the price has a chance to reach the stop loss. And in this case, because the movement is invalidated, I will close the 2 units. And we can see also that here we have the trend having changed. And so I should have closed my trade even earlier in this area, but it's too late. You see, this is the difficulty when we have to explain what is happening. So we have a trend reversal here, and this candle here, this one, was an entry setup to go short. Now, a short trade is not a trade to take in this context, but it was an entry setup corresponding also to the x66 of this trade. When you miss an exit, as well as you miss an entry, you have to wait for the next one, okay? This is why it's important to be concentrated and to focus on what is happening. Now the trend has changed, so normally on the next exit setup, I will close my trade. And if the trend reverses again, so my distraction here, I have been lucky with my distraction here. This sometimes happens, but you cannot always count on your luck, okay? I focus only on trend trades, Clement. And of course, a trend trade always starts with a reversal. Okay, here my exit will be a little higher at 13.6, sorry. Okay, I have to close the trade here. Okay. Because I had again another entry setup to go short. So on this trade, the loss has been minus 0.35%. The profit on the first trade was plus 0.48%. So the two trades globally gives a positive result, a small one, but still a small profit. And we can see that in the trade panel, in the terminal panel, in the account history. You can see on the 2 units here, we had respectively, let's say 22 euro, it is an account in euro, I think, or in dollar, it doesn't matter, and 27 on the second one, so $49, and the loss here is 35 for the 2 units. So if we make the difference, we have a positive result here. But as I have explained, the context was not appropriate for these trades. But you can see how we can fine-tune the way to handle the trade in a very accurate way, paying attention to every details of the trade, either for a trend continuation or for a trend reversal. Okay? A trend always starts with a reversal, Clement. And what my preference, but this is my preference. Okay, Melvin, take care and see you on our next scrolling party. My preference is always to catch a trend as soon as possible. When we are not in the context of the non-farm payroll, when we are not in the context of an important news release, you know that usually we will have the nicest trends during the European session. And so I am in front of my screen a little before the Frankfurt Open. And when I succeed to catch the trend around the London Open, I like to milk that trend at best. If I miss at some point the trend reversal, I can open a trade later in the same trend, depending on the kind of movement we are seeing, depending on the context. If we have reason for the price to move, then I can open a trade later in the trend. But my preference is when the trend is reversing. But this is my own preference, okay? My personal preference. Oh, thanks, Fiona. Okay. We have still approximately half an hour before we wrap up this session. Do you have any questions on whatever I have explained today or whatever you are seeing on the chart in terms of the max methodology, in terms of the tools we are using? So you use direction based on 5-minute max standard trends direction, and then use CRB chart to enter an ETF reversal in direction of that 5-minute direction. No, not necessarily. We can, when we use the ETF, the max ETF sum, okay, which is the uppermost level of the max, we can trade on that constant trend bar chart independently of the time bar chart. This is what I have made today to illustrate the trade, the two trades. Or we can trade on the CRB chart based also on what we are seeing on the time bar chart. And so if we take a trade in one direction in the CRB chart, of course, it must be in agreement with the direction of the time bar chart, of course. But in the time bar chart, sometimes if we use it in conjunction with the sum chart, we will see some counter indication. For example, here on the pound CAD, let me widen the chart of the pound CAD. This red vertical line is a vertical line representing the non-farm payroll. And I have opened the trade approximately in this area, okay? A few minutes after the non-farm payroll. This candle has closed 5 minutes after the non-farm payroll. And this candle is a long bar. And with the max standard, a long bar can never be an entry setup. And so normally, if I use the time bar chart and the CRB chart in conjunction, this is a trade I would have never taken. When we trade independently the chart, then this is something we can do. We can take the trade, especially with the CRB chart, when we know what may happen, when we understand the impact of the news on the chart. And so this is why, if the context is not appropriate for a trade, which was the case today with the two non-farm payroll, the Canadian and the US one, I don't take these trades. I have just taken them to illustrate our approach in terms of trade risk management. But yes, we can use the CRB chart and the 5-minute chart in conjunction, or any other time frame, because what we are using here, what I have made with the 5-minute chart, we can do with any time frame. We have members who like to trade the 12-hour chart and the corresponding CRB chart. We can create a CRB chart for any time bar chart with MetaTrader. How simple is it to set up the CRB chart? We use an indicator here, which creates the CRB chart, okay? And then we apply our template to the CRB chart. And there are a lot of indicators allowing you to create a CRB chart or a Renko chart or any other type of chart. I know max traders who like to trade, for example, with tick charts. As with what is happening, for example, in the futures market. Many futures traders like to trade with tick charts. And so we can do that also in MetaTrader, because we have tick volumes in MetaTrader, in the Forex, okay? Brad asked, how many pairs do you normally monitor during a trading session? It may be between 2 and 6 pairs, rarely more than 6 pairs. Maximum 8 pairs, but this is rare. And in fact, the pairs I monitor are the pairs given in our news watch list. As you can see here, after our top 10 pairs, we have here the suggested pairs for each day of the week. This weekend, we will update these pairs. And so on Monday, last Monday, should have I traded, I would have monitored only these 4 pairs. These ones for Tuesday, these ones for Wednesday, and so on. Okay, this is why today you have seen on my screen the pound CAD, the pound US dollar, the euro US dollar, and the pound yen. See, the pound CAD, the pound US dollar, the euro US dollar, and the pound yen. Okay? And as you know, we explain during the scrolling parties how to define these pairs. And so you can do that, you can make that selection yourself. This news watch list page is accessible to everyone. So it is a free page. Okay, you can access even if you are not a Max member. Simply go on our web page, www.maxtradingsystem.com/newswatch. Okay? And so you will get access to these informations freely. And even with an explanation, a short explanation, how to interpret the news we are giving in our calendar here. Okay? And if you scroll down through the page, you will see what we had for the previous weeks. I don't know how many weeks we are displaying on the page, but we have several weeks. And we have also a general remark at the beginning of the page. And if you want to be informed when the page is updated, you can go on our home page. No, you need to go on the watch list, the news watch list. Normally there is a, you can subscribe unless it has been deleted, because in fact the page is freely accessible. Okay? It would be better to wait for the September course, wouldn't it, as it is the most up-to-date presentation? No, it's not better to wait for the September course. We have the new standard course starting next week on the Friday. Okay. The SAM course. The SAM course, I don't know. Yeah, I think it will be in September. Yeah, the Max course will be in September, indeed. So do you just do training, or do you also manage fund? I do not manage fund, Ben. Here in Europe, I live in Europe, I don't have the right to manage funds. So I teach how to trade with the Max, and I trade only my own funds. I don't have the right to trade other people's funds. We need for that to have a license, and it's not easy to get that license. First of all, you need to have a degree from financial institutions, and the course the training is on 4 years. Okay, so you need to be graduated from that course, from that education level, and then you need to acquire some relevant experience, either in a bank or with a broker. And after that, you can ask to be licensed. But it is not easy, and the European monetary authorities are less and less favorable to give license to people in order to manage funds, except perhaps if at the same time you have a hedge funds, for example, because the license will give you the possibility, the right to trade other people funds with a hedge fund. And so, but the rules to open a hedge fund are very important, very strict, And so you need to deposit a lot of money to be able to open a hedge fund. So we need to be licensed to do that, and I do not want personally to trade other people's money. This is why we teach how to trade, because the aim for a trader is to become independent. Let's suppose that I would be able to trade your money, okay? And then suddenly I disappear for whatever the reason. You will be in big problems. And if you are not able to trade your money yourself, you will have problems. For your future, never count on other people. Never count on other people. You have to take your future in your own hands and be independent from everything else. You can take education, of course. You can ask a mentor to help you, but you have to develop your own skills to give you a better future. If you don't have your own plans, you will be part of someone else's plan. This is a management principle, a well-known management principle. So, how well does your system work in US market? How well? Oh, that's also a good question. Personally, I don't trade during the second half of the US session. The first half of the US session overlaps with the London session, the European session, let's say, okay? And so I have no problems to stay in a trade during the first half of the US session. And usually I close my trade somewhere between the Frankfurt close and the London close, sometimes earlier, sometimes a little later. Now we have, why? Simply because during the second half of the US session, we have smaller movements. We have members, max members, who trades only during the US session. And so they have decent results, they have nice results, by the fact that indeed they focus their trades, especially on the pairs we are suggesting here, either on our suggestion day after day or based on our top 10 pairs list. This top 10 pairs list represents the list of the pairs which moves the best. And so if we focus on these pairs, so you will have a lot of opportunities. For example, if we take either the two first pairs of this list, or the first 4 pairs of this list, or the first 8 pairs of this list, maximum 6 pairs, you will get between 2 and 6 trades with the max ETF standard, so not using the CRB chart. You will get around 6 trades per day and per pair. This means that you will get between, if you follow only 2 pairs, between 4 and 12 opportunities per day, and if you follow 8 pairs, between 16 and 48 movements you can trade per day. So you will have lots of opportunities. And half of them will be important movements of more than 20 or 30 pips. Okay? And approximately 15 to 20% of them will be movement of more than 50 to 60 pips. And when you get a movement of 50 or 60 pips or more, you will have nice trade because you can apply then our scaling approach. Now, this scaling approach is way more difficult during the second part of the US session. Our max members don't use the scaling technique during the second part of the US session. So they make an entry and then they close their trade later, for example, when the trend reverses or at the end of the day. And they make good trades. We have one of our members, for example, who trades only during the second half, during the US session, and it is now the 5th or the 6th week he has with no losing trade, no losing day, and with winning streaks of more than 50 trades, 50 winning trades in a row. That's really amazing. So, okay. So there are opportunities at any moment of the session, except the ASEAN session. The ASEAN session does not always provide good opportunities, except on Pacific pairs, so pairs with the yen, the Aussie, or the Kiwi, when there is an important news release with a surprise. Then, under such circumstances, you can expect nice movement also during the ASEAN session. What style of max system would you start learning if you would want to grow small trading account of 10K? Would you start swing trading max or day trading max? The ETF standard is, for me, the best approach, okay, because you have the entire methodology, and you are faced with the training for 8 weeks, in fact, and so there are a lot of opportunities to repeat some aspect of the training in such a way that you will master more easily all the concepts and the rules. And so now I make no necessarily distinction between day trading and swing trading because this depends on the time frame you will want to trade. And what we advise is to choose a time frame which fits your own constraints. Because, of course, most of you have another professional activity. And of course, I understand that I have been there myself too, okay? But if you have another professional activity, you cannot necessarily trade during that professional activity. And so you need to choose a time frame which fits your constraints in order to profit from the movement of that time frame. And higher time frame which are typically used by our max members are the 4-hour, but mainly the 8, the 6, the 8, and the 12 hours, but also the daily time frames. And of course, in such a case, we will more specifically talk about swing trading, but in fact, the movement we are trading are the movement or the trends given by our bias indicator, and along such a movement, when the conditions are appropriate, you can scale in. Even if you have another job, but if you use a higher time frame in your trading, you can easily master the trading process even using our scaling technique. And in such a case, you will have less trades to handle, of course, because the frequency of the trades depends also on the time frame you are using, you are trading, but you will still make a nice result even with the higher time frame. There are people who make a living trading only these higher time frames. So it's up to you to choose the time frame which best fits your constraints. And it is not forbidden, for example, to use 2 different time frames. Personally, for example, I like to trade the CRB chart corresponding to the 5-minute time frame, as I have illustrated today, but I have also trades on the daily time frame. These are independent trades. The advantage being the following: when I day trade, I take profits of the movement, the day movement due, for example, to the news release or to some unexpected event around the world. But with the trades in the daily time frame, I exploit the fundamentals, the fundamental movement due to the long-term decisions by the central banks, for example. Okay, so I exploit the 2 types of opportunities. Is max ETF a better trading system than normal standard max system that was developed? Yeah, indeed. And the reason is the following, Clement. Let me try to illustrate an example. Let's take, for example, the pound US dollar here. And let's choose a segment of the chart, or this one. Having started, no, it is not a good example. Let's try to find a good example here. The pound US dollar is a good pair to trade during the European and the US session. So here we are around the Frankfurt Open. Let me check. No, the Frankfurt Open was too close to our home base. Oh, let's take this one. This one will make it. Clement, you have taken in the past the max standard, okay, if I'm right, if I remember correctly. In the max standard, we trade only long trade when the price is above the home base. The home base is this blue aqua moving average. So this is a classic max uptrend. Okay, I will draw that rectangle in yellow. And inside that trend, you have to find the appropriate setup. And the appropriate setup was somewhere, let me draw a vertical line, somewhere. We had no real opportunity in that uptrend. So this movement was not really tradable with the max standard. This sometimes happens, okay? With the max ETF, instead, the entire trend is this movement here, when the slow bias has turned from red to green. And should this candle not a long bar, be not a long bar, this would have been the entry of that trend. So we would have exploited a movement of approximately here 40 pips. And so we don't care where the price is in relationship with the home base. What is important is when we have a directional movement, a momentum movement. And so the trend, the ETF trend, can start on either way of the home base. This means that we have many more movements we can trade. And when we are in a trend condition, the trend we can exploit is larger, way, way larger. Let me try to find a good trend during the European or the, oh, this was one here, you see? So the uptrend, the ETF uptrend has started in this area. The price was in a consolidation zone mode. Let me draw some line. The entry setup was here. And so based on the standard max, we can take only a long trade when the price is above the home base, but with the ETF, we take the trade right here. So before it reaches the home base, and here we are 21 pips before the home base. And so the entire movement we could have traded was the movement up to this top here, a movement of 130 pips. You see the difference between the standard and the ETF? So this is a huge, huge improvement within the max. But in general, I find reversals much less reliable than standard max trade. Yeah, it happens indeed with the with the standard. Let me take the pen here. Let me take my pen and let me change the color of the pen. So with the max standard, we have a winning rate of, no, it's not the pen, this, the pen, okay. With the max standard, we have on average a winning rate of 70 to 75%. Sometimes a little less, sometimes a little more. It depends on the market conditions, okay, with the max standard. But on average, our rework to risk ratio is between 3 and 5 R's, okay? R being the risk. So for example, if you take a risk of 2%, on average, the rework to risk ratio is between 6 and 10%. Now with the max ETF standard, the winning rate is around 60 to 70%. So the winning rate is smaller, that's true. But the rework to risk ratio now is usually larger than 5R if you trade the suggested pairs we have every week, every day. And so personally, I prefer a smaller winning rate, but a larger expectancy. Because what is important in a trading system, it's not the winning rate. The winning rate is not a good measure of the quality of a trading system. The reward to risk ratio, or the expectancy, is a better way to measure the quality of a trading system, and then the frequency of the trade. And with the max ETF standard, the frequency of the trade is way larger than the max standard. So if you base your choice only on the winning rate, you will get a lot of disappointments on the long term. I have no problem with a smaller winning rate because as I have explained previously, I don't attach any importance to an individual trade, but what I have made at the end of the day, or at the end of the month if you use a higher time frame to trade, okay? Expectancy is what matters, indeed. And if you understand that, the winning rate, you will forget once and for all the winning rate. You will no longer pay attention to the winning rate. No problem, Clement, you are welcome. Rob, all our trainings are live, and so the video are always recorded from live trainings, okay? Now, sometimes we provide the video under some special conditions, but this is not the general rule, okay? Okay, any other questions before we wrap up this session today? You can see if we consider long trade, here the price is reversing, okay, but the slow bias has not turned upward yet, so no trades for the moment in the pound card. Let me check if the parameters is correct. Yes, the settings are correct. No other questions? Yes, Clement, I'm recovering very well, and every week I feel a big difference compared to the previous week. But I am also making a lot of exercises. So either with my apartment bicycle or walking outside. So these exercises are very important for a good recovery. And of course, eating quality foods and eating correctly also is very important. So I hope you have enjoyed the presentation today. So it's always somewhat a pity when we don't have the good context with the non-farm payroll, but it is what happens sometimes. In fact, based on my experience, we have the non-farm payroll is tradable approximately 3 to 4 times out of 10 times. The rest of the times the conditions are not appropriate, but when we have appropriate conditions, we have huge movements in many pairs, and so with the max ETF you can catch many of these movements. Now outside the non-farm payroll, you can get nice movement, and what I do when I prepare the max price levels, for example here you can see on the euro US dollar these max price levels, see how this level was a level of resistance. And what I was doing in the past before my surgery, I was producing with the levels the trade of the week. And so what I was doing is I was choosing a pair in the suggested pairs here in the list of the suggested pair per day. For example, let's take, for example, the pound yen, and I illustrate on each day of the week all the movement which were tradable with the max ETF, and then I give in details one of them. I describe in detail one of them, and I call it the trade of the week. I hope to be able to come back to these charts this weekend. I'm not sure yet because I need still to be prudent while I'm recovering. But if I'm able to produce it, I will do it. And if you subscribe even to the free subscription, to the free formula, you will receive them. So, and you can see these levels are really amazing in terms of how the price reacts to these levels. And so, for example, if we have a setup to go short, for example here, it's better, of course, to have an entry on the right side of the level and to have enough place to the next level to consider a good reward, potential reward to risk ratio for the trade. And you can see how the price has reacted to the bottom and how the price has posed here on the intermediary level. So these levels are really excellent guides either to open trade or to make some MX. For example, someone who was trading that up movement here would have made an MX, in at least an MX at this level. Okay. Thanks, John. Okay, Rob, no problem. You can always contact Craig or Chris if you want complementary information. There is no problem for that. And Craig has posted some links in the chat area of the GoTo webinar. My heartbeat gets stronger every day. Yes, Robert, indeed. Oh, thank you, Marvin. I appreciate. Okay, I think we have answered all the questions. So, Craig, have we missed some questions or have we answered all of them?
I think we're good, Eusebio.
Okay, fine. So I think we are going to wrap up here. And so I really appreciate the fact that you have invested your time to be with us today. And so I wish you a great, great weekend. Be prudent if you trade next week. We should have nice opportunities as almost every week. And so I wish you nice trades and perhaps see you either next week, next Friday in the Max Standard course, ETF Standard course, or the next Monday in the Max ETF Primer course, the ETF Primer course. And so whatever your choice, we are at your disposal. So that being said, so thank you very much and have a great rest of the day. Bye everyone and take care.